So maybe I'll give you a little bit of the arc of what happened at Zoona, this first company that I co-founded in Zambia. So um, I very quickly, after we got the investment, and I started working with the two brothers who are the original founders. They asked me to become the CEO, um, and they were brothers, so I was facilitating decision making a lot. Let's just put it that way, and I had the investor relationships. And we kind of crystallized this vision of a cashless Africa, of like, how do we actually, now we can get this investment. How do we scale this thing? And I did two other things. One was I had a personal connection to the then CFO of Google, who came in as an early angel investor. And he happened to be the early chair and first investor of Engineers Without Borders that I volunteered with. So I was able to keep that relationship warm. And then second, I convinced my parents to mortgage their house and lend me $100,000 to go all in on the business. This was probably the scariest thing I've ever done and the hardest pitch I've ever made to any investor. But I was like knee deep in student debt, and I had no savings. Luckily, my fiance and then wife kind of had a stable enough job to pay rent. But I wanted to really be a partner in this business, and that was the moment where my co-founder Brad would always say, when you have bacon and eggs for breakfast, the chicken is involved, but the pig is committed. And so he would say that was the moment I became pig and actually became a co-founder, and then the CEO of the business. And we had lots of ups and downs, but it was like generally trending up, and we hit the hockey stick curve growth. Probably a year and a half after we closed the Series A investment. And at our peak, we had scaled to serve, we were actively serving a quarter of Zambia's adult population, so about 2 million monthly active customers. We were processing $60 to $70 million a month of money transfers. We expanded successfully into a second market next door in Malawi, and had visions of really going big. And where the story diverted was the last few years was really, really tough because first the macro environment shifted. So we started experiencing big headwinds in the form of like currency devaluations, lots of operational challenges on the ground that were like linked to the market. We had like a cholera epidemic, which was, everybody in the world now knows what a pandemic is with COVID. But we experienced this in Zambia when like the market went into lockdown because of a cholera epidemic. And then our whole business like had to shut down for like a few weeks. And I remember trying to explain this to my board, and it was like very, people didn't actually have that reference point of like, what do you mean? Like, these agents can't trade and people aren't sending money anymore. But what really, I think, crippled us, we ended up raising a big Series B. We had a failed expansion into a new market, and realized like that going country to country in Africa wasn't as simple as it was in like an investor pitch deck. The operational challenges and the complexity of that expansion was much harder than we anticipated. We didn't design it very well. And then at the end, we had a big investor pull out at the very last second, like after 4 months of due diligence, of what was a $40 million Series C round. That ended up being the thing we couldn't recover from. We at that point we had a very strong business in Zambia and Malawi. We were facing increasing competition from some telcos, but we were evolving into what would have become like a digital bank for Southern Africa, and we needed a lot of capital to fund that business plan. And the investor actually pulled out for a lot of reasons that were due to them, and a shift in strategy and a shift in management team that I won't go into. But also the reflection was, we were in a small market trying to raise a lot of money, like well ahead of our time. And it was a hard sell to get, investors to pour in like tens of millions of dollars into a Zambian business competing against telcos with kind of a limited market size. And that became what was probably the hardest period of my life, because the 9 months after the deal fell apart, um, the only thing we could do was slash costs. And any founder will know that when you actually are cutting costs in your business, you accelerate your cash burn because you have to pay severances to people. Um, and the morale of the company collapses. We couldn't drop pricing in the market when the competition was increasing because we would have been bankrupt instantly because we no longer had the investment coming in. Our early investors were kind of tapped out and couldn't put any more money in. No new investor would touch us because there was no lead in the round, and they were all asking us like, "I thought your deal was going to close." And so yeah, it was an extremely difficult time. We had like 250 staff at that point, right? So it was a proper company, but I ended up leaving in May 2019, just under like about a year after the investment round collapsed, and we ended up doing a deal with our kind of shareholders to put in a bit more money. Our lenders would convert some of their debt to equity, and we would shrink the business down into like a really small team, and then spin out a new like B2B strategy. And so the original vision of our company was no longer, but there's still like a kernel there and a technology and a strategy and like a lot of relationships that we felt had value. And it was a natural time for me to step aside. In hindsight, I probably should have done it a bit earlier.